Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. For those of you who may be new to the channel, on this channel, I do portfolio updates every Sunday like this one you're about to see. I did add $1,567 to the portfolio. I also do a series called the Stock Pick of the Day, Monday through Thursday, whenever the stock market is open. So if you're interested in content like that, dividend growth investing, I cover topics I'm interested in from time to time, as well as a stocks to watch video I will have coming up, and I do before the beginning of every month, the stocks I will be watching for the month coming up. So as we turn the calendar from January to February, I will be revealing what stocks I would like to add to my position or add to the portfolio if they are not already in there, ones I'm feeling value or seeing value in currently. So again, if you are interested in content like that, go ahead and hit that like button down below, hit the like button down below, hit the notification bell so you're notified whenever we post any new content, and most importantly, hit that subscribe button and join me on this journey to financial freedom. Hopefully you are on your own journey as well. And for those of you who have not started your journey yet and who are looking to open your own brokerage account, I have a Webull link down below as well. If you use that link, I'll get some free stocks. You'll get some free stocks. You have to deposit $100 or more, and whatever promotional giveaway they're having at the time will be what you will apply for. All right, and if you don't have to use that link, but it is a way to help out the channel. Like I said, but hitting that like button, hitting the notification bell, and subscribing to the channel helps out as well. With that said, let's jump right into the video. Like I said, we added $1,567 in new capital to the portfolio. We also had some dividends paid out, so let's start there. So as I said, we did have some dividends paid out this week. We had Cisco Systems paid out $52.64, which we have the drip set up. And what that means for those of you who may not know, dividend reinvestment plan, that basically means whenever a position within the portfolio pays out dividends, it automatically goes right in and buys more dividends of that stock at whatever the share price value is at the time. So in this instance, that $52.64 bought 1.11043 shares at $47.40. So whatever the market is, whenever the dividends paid out, that's what it'll buy them at. And this is also a great example of the dividend snowball, right? So now the portfolio is buying full shares of Cisco Systems. This is the amount of money I've already invested in Cisco. If I didn't add any more, any additional investments, any additional capital, it would buy 1.11, and that would get a little bigger every time, shares every time the dividends were paid out. So over the course of this next year, my portfolio will buy 4 more shares, even if I don't put in any new capital. So, and that $52.64 in dividends added $1.68. So that 1.11 share adds another $1.68 in dividends over the next year. Next up, on January 26th, we started adding some of the new capital. We added $1,290.24 on this day. And with those funds, we picked up 5 shares of Verizon Communications, ticker VZ. This is out of the communications sector. We picked up those shares at $39.96, and I think I've mentioned it before. If you haven't caught it, I like Verizon under $40 per share right now. I hear my dog in the back. He must be barking at the neighbor. You hear that? Oh, he's not going to do it now. Anyways, and I'm recording this late Saturday night. You're going to see this Sunday morning. But anyways, Stanley Black & Decker, we picked up 4 shares of ticker SWK, Stanley Black & Decker at $84.73. We picked up 2 shares, and Stanley Black & Decker is out of the industrial sector here. We picked up 2 shares of Union Pacific Corp, ticker UMP. This is a railroad. We picked up those 2 shares at $196.86. My cost basis here is about 198, so I like them under 198. I think anything under 200 is probably a pretty decent buy for this one here. And 4 more shares of Owens Corning, ticker OC, at $89.44. And Owens Union Pacific is another one out of the industrial sector, and Owens Corning is out of the industrial sector as well. And all told, this $1,290.24 added $41.85 in additional passive income over the next year. Now, we weren't quite done. We did go back to the well on Friday. Big drop in Intel. Obviously, if you pay attention to Intel at all, you'll know they missed earnings, right? So the stock really sold off for a couple of days in a row. I think 5% one day, maybe 8% another one. So I took the opportunity to lower my cost basis. I believe in a long-term play on Intel, so I'm not really worried about the short-term volatility. I expected a little bit of issues over the next year or so as they do a lot of investments, capital investments into these new plants that they're building, and that this is really a three-year turnaround. So I don't mind if this goes down to even 24, 20. I saw some comments in the comment sections of some reports I was reading, people saying it's going to go down in the teens. Well, if it goes down to the teens, I'll buy more and really reduce my cost basis. My cost basis is around $27.85, so I like it anything under that. It was just under that. So I took the opportunity to add 10 more shares of Intel Corp, ticker INTC, out of the information technology sector. And those $277.55 there added $14.60 in additional passive income. Total invested between the 2 days, the 26th and the 27th of January, we added $1,567.79 in new capital. And that new capital, as well as the dividends paid out from Cisco, added $58.13 in new passive income, right? New dividend income. Now let's run through the portfolio update real quick. Total value of the portfolio has crept up a little bit. I'm over 3% above the market right now. I think the overall market is still down about 5% from this time last year. So I am slightly beating the market by about 8 percentage points. But so it's sitting at $116,479.15. Dividend yield is down a little bit. A lot of green in the portfolio this last week. So yield is inversely correlated, right? As the market typically goes up and the portfolio value goes up, dividend yield typically goes down, right? And as the portfolio value goes down, market goes down, yield typically goes up. Inverse correlation here, but still a very nice dividend yield. I think the market average is around 2.5, 2.8, somewhere in there. And the annual dividend income, this is what it's really about. The passive income provided by the positions within the portfolio in the forms of the dividends paid out. And this will continue to grow. This is that snowball. This will continue to grow as I invest new capital and as the positions already in the portfolio pay out dividends and they go back in through the drip and buy more shares. So that snowball just keeps bigger and bigger and bigger, faster and faster. And that annual dividend income currently sits at $5,771.86. I would say we'd probably be in the 5,800 range next week. Looks like we're adding about $60 average per week right now. Now a quick run through the sector allocations within the portfolio. We're sitting at 9.4% in communications, 8.41% in consumer discretionary, 5.25% in consumer staples. Energy is sitting at 8.28%. Financials at 15.82%. Biggest portion of the pile is financials. Healthcare is sitting at 7.80%. Industrials has crept up there to 14.08%. A lot of buying in the industrial sector this week. Technology is sitting at 13.09%. Materials sitting at 13.31%. No utilities in the portfolio right now. There are a couple I'm watching, waiting for them to get into fair value, what I consider fair value. REITs and real estate is sitting at 14.28%, and ETFs, nothing currently in ETFs either. So that is really it on this one. Really appreciate you stopping by. So how was your week in the market? Was your portfolio green? Was it red? Was it a mixture, a little bit of mixture of both? I think I saw quite a bit of green in the market overall this week, which again is nice to see, but I do like the red days. Those are the days I like to take to average down my portfolio, increase my potential future returns, and increase my yield whenever I'm able to average down. So I don't mind the red days. Those are the days that I look for value. And it doesn't just have to be in the overall market. If you're a single stock picker like myself, you're looking for wherever the value is within your portfolio. So it might be in industrials one week, it might be in consumer staples the next, it might be in consumer discretionary, right? Where is the value? And then pick those days whenever it's hopefully the lowest and buy in at those opportune times, right? We're not trying to time the market, just trying to find the best value. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. And drop a comment down below. Let me know what you think of the video. What positions did you add? I do really appreciate your comments, and I do respond to the comments on the day I post the video. Always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and put it all down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Say thanks for stopping by. Hope you had a great weekend, and we'll see you next. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in your educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and self criteria, or seek the advice counsel of a certified financial advisor.